Have you ever wondered what type of life insurance is right for you? In this video series, we're going to talk about the different types of life insurance and when to use which kind and what would be optimal for you. My name is Steve Larsen with Produce Freedom, and I help people build financial peace so that they can give back and they can live their passion and purpose. Today, we're going to talk about the use of different types of life insurance. And this is at top of mind because yesterday I just went to a funeral of my cousin's husband. It was a tragic accident that happened, and it's just on the top of my mind, and my heart is so weighed down by grief for Amber and the two kids that he left behind that were only ages 6 and 3. And honestly, in the last probably month and a half, we've lost about 3 people that have been close to us. And it's just a constant reminder that life is fragile. And as we're going into this Thanksgiving period, to be grateful for every moment, to make the most of every day, and to really get the financial stuff in order so that you can have peace and your family is taken care of, even if the unlikely happens. So we're going to jump into this, and with a heavy heart, I want to go and I want to explain some of the different uses of life insurance. Now, before we get into the types of life insurance, one of the things that's often overlooked is that the company actually matters, and the way that it's owned, the way that it's structured, because it will matter to your policy. The whole goal with life insurance is to get that leverage, right, the insurance coverage, but to make sure that it's paid out and to make sure that your heirs get it. If your spouse gets it, your kids get it. Heaven forbid you pass away. At some point, we all will. So there are 3 basic types of ownership when it comes to life insurance company. There's privately owned, which is pretty straightforward. This is just individuals that are owning a life insurance company and creating the business model around life insurance. There's stock owned, which means that the stockholders own shares of the life insurance company. And this causes a little bit of grief because as a stock-based company, there's kind of 2 different masters, so to speak, that they're trying to keep happy. It's the policy owners that they want to keep happy, but they also want to keep the stockholders happy by paying good dividends. And so sometimes, depending on how the company is structured and managed, and the culture of that company, sometimes the stockholders get more benefits than the policyholders. So that's something to consider. And then lastly, there's mutually owned life insurance companies, which basically means that if you own a policy in that company, that you are actually technically not part owner. It's not like you get shares, but it's because you're collectively paying in. You are the collective ownership. So we always structure anything that we do with our clients with mutually owned companies. It's the best end result for our clients. Now, the other thing is that you want to consider is you want to look at how are they rated. Are they able to, what does their balance sheet look like? Are they able to manage all their obligations for all outstanding life insurance contracts and annuity contracts? What are the ratings? Some of the ratings that you see on here are AM Best, the Fitch ratings, Moody's Investor Service, and the Standard & Poor's rating. And so that way you can kind of get a feel of, okay, is this company really up to snuff? Then again, the worst case scenario is you continue to pour money into life insurance policies for a company that doesn't hold up, doesn't hold out. And there's things in place where the state will have some coverage, and worst case, if you have a bad company, it's possible that another larger, stronger company could go and buy up those policies, but there's no guarantee for them to do that. And so you want a really strong rated company. And then the other thing that you want to consider that isn't talked about much is what risk does a life insurance company cover, right? So if your policy is with a company that also insures, home and auto, fire damage, tornado, hurricane, flood, then your cost of insurance is likely going to be up higher because they're looking at pulling all these other risks into this. So we only, for our clients, if we put something in place, we only use companies that are life-only companies. So they only do life and they only do annuity. So that's where I want to start. In our next video, we're going to start talking about term insurance, what it is, when is a good time to use it, when is it not beneficial time to use it. And so look for that next video, and we'll also be talking about a few others that like universal life and whole life permanent life insurance, so that you can kind of of understand and be able to ask better questions to see what the right fit for you. This is when we evaluate anyone, we always work that into our continuous cash flow method to see if you have any of these in place and to make sure that you have the best coverages in place as part of our policy. So anyway, look for the next video. Excited to see you there.